Good evening, everyone.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
How are you all of you?
Fine, sir.
Okay. Right. So let's start the session. Give me a moment. Just a minute. All right, everyone. So in the previous class, we have started this topic, formation of capital account. So before starting anything new in this session, we will first of all revise everything, and then only we will move to the new topic. So in the previous class, we were talking about the preparation of the profit and loss appropriation account, and I think we have completed question number 23 in the last session, right? And after that, we started this topic, formation of the capital account of partners. So in this topic, until now, we have talked about that partners capital account. To form the partners capital account, we have two methods. One is called the fixed capital method, and then there is fluctuating capital method. So there are two methods by which partners capital account can be formed. So first of all, we will talk about fluctuating capital method, and yes, okay. So while discussing fluctuating capital method, I've told you that it is a type of partners capital account wherein only one account is prepared and all the transaction that affect the partner's capital account is recorded only in one account. So let me show you how it is actually done. All right. So see, partner's capital account, or you can say the capital account, can be formed by two methods, fluctuating capital method and the fixed capital method. Right now I'm talking about the fluctuating capital method. As I've told you that in case of fluctuating capital method, we have to prepare only one account, which is called partners capital account. Partners capital account. And in this particular account, we need to record all the transactions that affect the capital of the partners. So let me show you. We have these columns in the partners capital account, particulars. Let's suppose there are two partners, X and Y. So we have to make two columns, one for the partner X and other for the partner Y. Then on the credit side as well, we will be writing particulars and the partner X and the partner Y. Okay, so first of all, we will start from the capital. We will start from the credit side of the account. This is the credit side, and as you already know, this is the debit side of the account. On the credit side, we record the opening balances of their capital by balance. BD is recorded on the credit side of the capital account. Whatever the opening balance of the partner, whatever the value of the capital given in the question, we will be writing it here. Let's suppose partner's capital given in the question is 5 lakhs and 4 lakhs. So the amount of capital will be recorded on the credit side of the partner's capital account. Then all those transactions that may increase the amount of capital for the partner will be recorded on the credit side, and any transaction that leads to the reduction in the value of the capital of the partners will be recorded on the debit side. For example, we have when we give interest on the capital contributed by the partner, whenever interest is given to the partner on their capital contribution, this will increase their capital, right? So interest on capital if given to the partner, such interest should be recorded on the credit side of the partner's capital account. Let's suppose Mr. X has been provided with a capital interest of rupees 2000 and Y is given interest of rupees 1500. So any interest given to partners on their capital contribution will be recorded on the credit side. Why it is being recorded on the credit side? Because this interest on capital is going to increase the overall amount of capital. So any transaction that may lead to increase in the value of the capital for the partners will be recorded on the credit side. Similarly, when we give salary to the partner, such salary shall also be recorded on the credit side. So let's suppose we are providing salary of 10,000 to Mr. X and 8,000 to Mr. Y. Such salary should also be recorded on the credit side. Similarly, any payments that may lead to increase in the overall capital of the partner will be recorded on the credit side. Example, commission paid to partners will also be recorded in the credit side of the capital account. Similarly, profit transferred to capital account, profit given to partners shall also be shown on the credit side. I'm sure that all of you guys already remember that while we prepare profit and loss appropriation account, after reducing all the expenses from the profit, the remaining profit, which is called divisible profit, is divided among the partners, right? So whatever the profit that is being divided among the partners, such profit shall also be recorded in the partner's capital account. All right. So profit or loss, in fact, profit from appropriation account will be shown on the credit side of the partner's capital account as well. All right. So the thing that I want to say here is that all the transaction that may increase the value of the capital for the partner will be shown on the credit side. And any transaction, like for example, partner withdrew certain amount from the firm. So two drawings, any amount that partner have withdrawn from the business shall be shown on the debit side of the partner's capital account, since it is going to reduce the value of the capital of the partner in the business. So all the transaction that may reduce the capital will be shown on the debit side. Similarly, if we are charging interest on drawing from the partner, such interest on drawing shall also be shown on the debit side, because this is also going to reduce the value of the capital for the partners. So all the drawings will also be recorded on the debit side. All right. And then after recording all the transaction that may increase the value of the capital on the credit side and transaction that reduces the value of the capital for the partner on the debit side, now at the end we will calculate the balances. We will calculate balance, and such balance will be shown on the debit side by to balance C. And then we will close this account. Now this account will be closed. So this is how partner's capital account is formed as per fluctuating capital method. All you need to remember for now is that only one account is prepared. Number one, we need to prepare only one account as per fluctuating capital method. Secondly, in the fluctuating capital account, when we prepare partner's capital account, all the transaction that may increase the value of the capital, that is, you can say all transaction that is considered as an income for the partner will be recorded on the credit side, and transaction that is considered as an expense or that may reduce the capital for the partner will be shown on the debit side. And after entering the transaction on the relevant side, at the end we will calculate the balances, and such balances will be shown on the debit side by the name of to balance CD. Okay, so this is the definition of the fluctuating capital method. It says that it is a method of preparing the capital account wherein only one account, that is partner's capital account, is prepared to record all the transaction. All right, so it is a type of capital account which changes or fluctuates every time there is addition in capital or when capital is withdrawn. So any transaction any transaction when it is recorded on the partner's capital account, it will affect the capital balance of the partners, right? So therefore, it is called fluctuating capital method. So every time transaction is recorded in the partner's capital account, it will either increase the value of the capital or it will either decrease the value of the capital for the partners. Therefore, it is called fluctuating capital method. Okay, and see, this is the format of the fluctuating capital. This is the format of the partner's capital account under the fluctuating capital method. So I want all of you to note it down. Please note this on your notebook, partners capital account, and after that we will do one question based on the partners capital account so that you may understand the entire concept in a better manner. So I guess definition is clear to all of you, right? Everyone, definition is clear to all of you. Like, what is fluctuating capital method? Fluctuating capital method is a method of preparing capital account of partners wherein only one account is prepared, which is called partners capital account, and all transaction that leads to increase in the capital or reduction in the capital is recorded at only one place, which is called partners capital account. And partners capital account record all these transactions like opening balance of the capital and any transaction that leads to the addition in the value of the capital, partner's salary, partner's commission, interest on capital, all transaction at one place. This is the form. Everyone, is this clear to all of you?
Sir, can you show the components as per the fluctuating?
Yeah, these are the components. Done, everyone?
No, sir, wait. Sir.
And I want all of you to make the format of the partner's capital account as well. I'm moving to the next slide. Everyone note it down on your notebooks. Partners capital account. Opening balances of the capital is recorded on the credit side, and all transaction which is considered as an income for the partners shall also be recorded on the credit side, and all transaction that leads to the reduction in the capital or considered as an expense from partners point of view will be shown on the debit side, and at the end we will calculate the closing balances by the name of to balance sheet. Let me know when you guys are done. Then we will move to the question.
Sir, all the expenses and losses are recorded on the debit side of the partner's capital.
Yes, all the expenses or the losses are recorded on the debit side.
And all that income and gains will be recorded on the credit side of the partner's capital.
Yes, yes, exactly.
Okay.
But only those transactions which affect the partner's capital, not all kind of expenses and all kind of gains. Only those transactions which directly affect the partners.
Those transactions which are affecting the partner's capital account.
Yeah.
That will be recorded on the debit side.
Correct. Done, everyone? Shall we move to the question?
Yes, sir.
Yes. All right. Okay. See, so we will start with question number 24, which says that there are two partners, A and B, and both these partners shares the profit and losses of the business in the ratio of 3:1. On 1st of April, their capital stood at 50,000, 30,000, and 50 and 30,000. Okay, there are two partners. And question also says that the during the year, the business generated a net profit of 50,000. And the term of partnership further specifies that interest shall be allowed at 6% per annum to both the partners on their capital contribution. And A will also get a commission of 2% on turnover. So whatever the turnover business is generating, A will be getting a commission of 2% on that turnover. Turnover means sales. Then point number C, B will get a salary of 500 per month. Okay. And in point number D, it says that apart from salary, we will also get a commission of 5% on the net profit after deduction of all expenses, including such commission. Now, this is very, very important. And this is going to be a little difficult for you. So I'll guide you how to solve this particular point. Never mind, move to the next point. Partners drawing for the year stands at 8,000 and 6,000. Turnover for the year is this much. Okay. And considering the above fact, you are required to prepare the profit and loss appropriation account. Okay. And then also partners capital account. So first of all, we need to prepare the partners. We need to prepare the profit and loss appropriation account. And I'm pretty sure that all of you already know how to prepare the P&L appropriation account. And after completing the partner P&L appropriation account, we are required to prepare the partners capital account as well in this question. Okay, so I hope question is clear to all of you. Question is pretty simple. There are two partners, both are sharing profit in the ratio of 3:1. Their capital contribution is 50,000, 30,000. They are entitled to claim interest on their capital. One of the partner is entitled to claim commission at 2% on turnover. Okay, and B will get a salary, and B will also get commission. These points are given. Now we need to prepare the P&L appropriation account. So I'm pretty sure that you already know how to prepare P&L appropriation account. So I want all of you to start preparing P&L appropriation. All of you prepare P&L appropriation, and then we will talk about the partners capital account. Everyone, prepare P&L appropriation accounts on your notebooks.
Excuse me, sir.
Yes, sir.
How will we treat the turnover?
Turnover is already given in the question. Huh? Turnover
Uh,
is 3 lakh and there will be no treatment for turnover. Turnover is useful just for calculating A's commission.
that's it.
That's it.
Okay, thank you, sir.
Since turnover is recorded in the trading account, na, and we are not required to prepare trading account.
Okay,
We
sir.
are only required to prepare P&L appropriation. So there is no use of turnover other than calculation of interest, calculation of commission for partner pay.
Okay, sir. Thank you.
Okay, so first of all, we will prepare P&L appropriation account. This is how we will prepare P&L appropriation. And in P&L appropriation, first of all, we will record the value of the profit, right? So on the credit side, we will write down by net profit. And net profit is already given in the question as 50,000. So on the credit side, first of all, net profit will be recorded. Okay. Then question says that both the partner is entitled to claim interest at 6% per annum, right? In point A, question says that partners is entitled to claim interest at 6% per annum. So now we will go to the debit side of the P&L appropriation account and write down to interest on capital. Both the partners are entitled to claim interest, so therefore partner partner A and B. A and B. We will calculate interest on their capital. So capital contributed by A and B are 50 and 30,000. So on 50,000, we will calculate interest at the rate 6% per annum, right? So at 6% per annum, that means annually Mr. A is going to get 3,000 as interest on capital. And similarly, B will be getting 40,000, 6% of 40,000. It will 6% of 40,000. The capital contributed by B was only 30,000. So 1,800 will be the interest on capital for B. Now we will total write down the total of the interest on capital in the amount column. 3,000 plus 1,800, it will be 4,800. Tell me everyone, is this clear to all of you? Calculation of interest on capital is clear, guys?
Yes, sir.
Yes, sir.
Okay. Now move to the point B. Point B says B will get point B says A will get a commission of 2% on turnover. All right. So now we will calculate to B's commission. Or in fact, let's put the heading to commission. B will be getting commission at the rate 2% of the turnover. Turnover is 3 lakh. So 2% of 3 lakh will be 6,000. All right. 2% of 3 lakh will be 6,000. Right. And other than this, in point B, C, question C is that A will get a commission. No? This is A, not B. A is going to get a commission of 2% on the 3 lakh of turnover. Now, in point C, question says that B will get a salary of 5,000 per month. So now we will calculate 2 B's salary. B's salary is how much? It will be 500 per month. That means for the entire year, the salary will be 6,000. 500 into 12. It will be 6,000. Is that clear, everyone? Salary and commission for A and B is clear to all of you.
Yes, sir.
Now, point number D also says that B will get a commission of 5% on profit. B will get a commission of 5% on profit after deduction all expenses, including such commission. Now, this is very, very important. And calculation of this particular point will be completely different. We did not cover this point in the previous questions as well. So this is going to be a new concept, new point. And I want all of you to be very, very attentive while while calculating the commission for B, for point B. So we will write down B's commission. B's commission is how much? It will be 5% of what? 5% of the profit. See, question says 5% of the profit. Is that clear? 5% of the profit. So in this situation, we need to calculate, we will have to calculate the profit. We will have to calculate profit after deduction of all expenses. All right. So for that purpose, we will prepare a working note. To find out B's commission, we need to prepare a working note. So I'm preparing a working note. I want all of you to be very, very attentive. This is very, very important. Working note number 1. See, so first of all, net profit is already given. This profit, net profit is before paying commission, right? Before commission. Net profit before commission is given in question, which is 50,000. Okay. So first of all, we will reduce all expenses out of this. All expenses. So what do you mean by all expenses? We will subtract all expenses like interest on capital. We will subtract the commission paid to A. Commission paid to A was 6,000. And then we will also subtract 6,000 of B's salary as well. And whatever the profit we will get, on that amount we will calculate the B's commission at the rate 5%. So let me show you how it will be done. So first of all, out of net profit before commission, we will subtract interest on capital. Interest on capital paid to partner is 4,800, right? So out of 50,000, we will first of all subtract 4,800. Then we will subtract B's salary. B's salary is how much? It is 6,000 for the whole year. Then we will also subtract A's commission. So why we are subtracting everything? Because question is saying us to calculate commission at 5% after subtract. Commission will be given at the rate 5% on profit, and such profit need to be calculated after subtracting all kind of expenses. So therefore, I'm subtracting all expenses out of the profit. So 50,000 minus 4,800 minus 6,000. Then further, A's commission was also 6,000. So I'm subtracting this as well. Now, this is the remaining amount will be 50,000 minus 4,800 minus 6,000, right? And further 6,000. So 33,200 is the 33,200 is the profit. Let me just cross check. Yes, this is right. 33,200 is the profit. This is the profit, net profit after deducting all expenses. This is the net profit after deducting all expenses. Okay. Now see. Now we will calculate A's commission. Now we will calculate B's commission. We need to pay B's commission at 5% on profit. So B's commission will be calculated like this: 33200 into 5% divided by 105 into 5 divided by 105. This is how we will calculate B's commission. So why we are multiplying it by 5 and then dividing it by 105? Because question is saying that we need to pay 5% a commission after deducting all expenses. Number one, after deducting all expenses, including such commissions as well. So whenever question says that we need to calculate commission after deducting all expenses, including such commission also, then always remember that this is how we will be calculating. This is how we will calculate commission. This is the amount of profit. On this amount of profit, we need to find out commission. And commission is at what percentage? 5%. So we will multiply it by 5 and divide it by not 100, 105, 105. If by chance question says that you need to calculate commission at 4%, then in such a situation, we will multiply by 4 and divide by 104. If question asks you to calculate commission at 7%, then in that case, we will multiply it by 7 and divide it by 107. Always remember, whenever commission need to be calculated after deducting such commission also, only in that situation we calculate commission in this manner. 33,200 into 5 divided by 5. So commission amount of commission will be 1581. This will be the amount of commission. Is that clear, everyone? These commission calculation of these commission is clear to all of you. Anybody want me to repeat it again?
Clear, sir.
It is clear, Alexander, and everyone else.
Yes.
Kushi, Ayan.
Sir, can we note it down?
Yeah, sure, you can note it down. Anybody, if it is not clear for anyone, please let me know so that I can explain it again. I understand that this is a little difficult concept. This is a little, this is new for you, and therefore I want all of you to tell me whether it is clear to all of you or not, so that I can explain it to you again.
I can explain it again.
Yeah, okay, no problem. See, the question says that in point D, what question says? Question says that B is entitled to claim a commission of 5% on profit. Okay, so if question simply says that we need to give 5% commission on profit, then it is okay. We will simply multiply 5% with the amount of profit. That's it. But this time question is saying that profit, the commission will be paid on such profit which will be calculated after subtracting all kind of expenses, and also such commission. Whenever question says that we need to give commission after subtracting such commission also, only in that situation we apply this method. Anyways, so see, first of all, what do? We will first of all write down the profit, amount of profit. Then we subtracted all expenses. We have subtracted all expenses. After subtracting all the expenses, we got the net profit as 33,200. Now we cannot simply calculate 5% on this profit. Whenever question says that commission need to be paid at 5% after subtracting such commission, in such a situation, we calculate commission like this. Let me show you again. 33,200, we will multiply it by 5. Why? Because we need to give 5% of commission. But we won't divide it by 100 this time. We will be dividing it by 105. And by chance, if question says that we need to give a commission of 4%, then in such a situation, we will multiply it by 4 and divide it by 104. Okay, sir, in what situation we need to follow this formula, or in what situation we will be solving the commission like this? Whenever question says that commission need to be paid after deducting such commission, this, whenever you find this statement in the question, you will always calculate commission like this. I hope it is clear to all of you.
Yes,
Is that
sir.
clear now? Let me show
Yes.
you the working note. How I have calculated commissions. This is how we will be. This is how I have calculated manager's commission. Out of net profit, first of all, we will subtract interest on capital, then partner's salary, then partner's commission, and then the remaining amount will be 33,200. And on this amount, we have calculated 5% manager commission, like this: 33,200 into 5 by 105. So this is the working note. Please note it down. Done, everyone? This working note is clear to all of you. Have you guys noted it down?
Yes, sir.
Okay, okay. Okay, now we will write down the B's commission as 1581, as we have calculated by preparing the working note. Okay, so I guess we have recorded all the transactions. Just a minute. The point number D is also covered. Now, question also says that partners make both the partners are withdrawing certain amount, 8,000 and 6,000. Okay, and since it is not mentioned in the question that drawings are subject to interest, so therefore we won't charge any kind of interest on the amount of drawings. Turnover is also given, so turnover is already treated, and there is no other use of the turnover. Okay, so this is it, I guess. There is nothing more that we need to do in this question. Now, all we need to do is just find out the divisible profit. So first of all, we will total the credit side. Sum total of the credit side is 50,000, right? 50,000. And out of this 50,000, we will start subtracting all these value. 4,800 minus 6,000, 1,581, and 6,000. So let me show you. Out of 50,000, we will first of all subtract 4,800, then 6,000, then 1,581, and then 6,000. So 31619 will be the profit. 31619 is the profit that need to be divided among the partners. So two profit transferred to partner A and partner B. This profit will be transferred to partner A and B in their capital sharing, in their profit sharing ratio. So what was the profit sharing ratio of both these partners? It was 3:1, right? So now 31619 will be 31619 will be divided among the partners in the ratio of 3:1. That means 3 by 4, and 31619 will be given as 1/4. All right, everyone. Is that clear, all of you? Now we will write down the values 2371, 714 for Mr. A, and out of 31619, Mr. B will take 7905. 50,000. Tell me, everyone, is this clear to all of you? P&L appropriation is clear. We are still uh, required to prepare the partner's capital account. So tell me, P&L appropriation is clear to all of you.
Yes, sir. Clear.
Khushi, Ayan, Hiba, Dhruv, is that clear?
Yes, sir.
Yes, sir.
Okay, all right.
Yes, sir.
So if you want to take the screenshot of the P&L appropriation, this is the P&L appropriation that we have made on the sheet as well. You can take the screenshot of this. Now, as the P&L appropriation is completed, we are also required to prepare partners capital account. So for that purpose, we have to prepare the format of the partners capital account. So this is how partners capital account will be formed, right? So since we have two partners A and B, so I need to make two separate column for the amount of partner A and partner B on the credit side as well as on the debit side. Now, on the credit side, first of all, we will record their opening capital balances. So whenever you will write opening capital balance, you will write it in this format: to balance BD. Balance B. What are their capital? What just their capital were 50 and 30,000. 50 and 30,000, right? So 50,000 and 30,000. Is that clear, everyone? Opening
Yes, sir.
balances for A and B will be 50 and 30,000. This is clear to all of you. Okay. Now we will come back to the P&L appropriation account and see what are the various income that is transferred to the respective account of the A and B. So see, we have given interest on their capital, right? So interest is given to partner A and B. So we will go to the partner's capital account. So this will be by balance. And write down by interest on capital. Interest on capital for Mr. A was how much? It was 3,000, and for B it was 1,800. So I will write down 3,000 and 1,800 for B. Is this clear, all of you? Interest on capital is clear.
Yes, sir.
We are taking these values from the P&L appropriation account. After that, we will again come back to the P&L appropriation and see, other than interest on capital, we have also given commissions to Mr. A and B as well. So now we will write down to by commission. By commission. For Mr. A, commission was how much? It was 6,000 because it was on the turnover. And for B, it was on the profit after deducting all such commissions. It was 1,581. 1,581. Then we will again come back to the P&L appropriation account and see what other incomes partners have generated. So Mr. B had received a salary of 6,000. So we will go to the partners capital account and write down by salary. Salary is not given to Mr. A, so no entry will be done in this column, and 6,000 will be recorded in the capital account of B only. After that, we will look at the P&L appropriation again and check what other income both the partners have generated. So now you can see, other than commission, interest, and salary, profit is transferred to Mr. A and B. So now we will come back to the partner's capital account and write down by P&L appropriation. This much of profit is being transferred from P&L appropriation. So Mr. A have received 23714 as profit, and then Mr. B have received 7905 as profit. Okay, so this is it. These are the transactions that we need to record on the credit side. Is that clear, all of you? All the transaction recorded on the credit side in the partner's capital account is clear to all of you or not?
Yes, sir. Clear.
Other than Alexander, everyone is clear?
Yes, sir. It's
Yes,
clear.
sir.
It's clear. Okay. Now, any one of you can tell me what entry, what transaction we will record on the debit side of the partner's capital account. What item we need to record on the debit side of the partner's capital account?
Sir, drawing.
Drawings, correct. So drawing, what are the value of drawings made by both the partners? It is 8,000 and 6,000, right? So we will come back to the partner's capital account and write down two drawings. 8,000 by A and 6,000 by. All right. I guess this is it. There is nothing more that we need to write on the debit side of the partner's capital account. Okay. Tell me, guys, is this clear to all of you? Now all we need to do is just total the credit side and subtract the amount on the debit side and find out the closing balance. So to balance CD will be calculated. This is called closing balance of the partner's capital. So let me show you how it will be done. First of all, we will total the credit side of the partner A. So partner A balances on the credit side, you can see 50,000 plus 3,000 plus 6,000 and then 23714, right? This is the credit balance of partner A. Now out of this credit balance, we will subtract 8,000 that he have withdrawn minus 8,000. So remaining amount of profit in the form that belongs to A is 74714. This is the closing balance of the capital for Mr. A. And similarly, we will calculate closing balance of B as well. So for B, we will first of all total the credit side amounts, 30,000 plus 1,800 plus 1,581 plus 6,000 plus 790. So 47286, and out of 47286 we will subtract 6,000. So 41286 will be the closing balance for Mr. B. This is it, guys. Now all we need to do is tally both the sides. So sum total of this will be 47286 and 47286. And similarly, for A, it will be 74714 plus 82714. 8274. So this is how we will prepare partner's capital. Is that clear, all of you?
Yes,
Vika,
sir.
Alexander, Ayan.
Yes, sir. It's clear.
Yes, sir.
So let me show you the solution on the PowerPoint so that you can take the screenshot as well. This is the partner's capital account. I want all of you to take the screenshot of it, please. Understood, everyone? Is this clear to all of you?
Yes, sir.
Yes, sir. Clear.
So question is little lengthy, but I don't think it is very difficult. Only thing is that we need to prepare partners capital account, and that in the partners capital account too, we most of the items are getting transferred from the P&L appropriation account itself. So the only task will be for only task will be preparation of the profit and loss appropriation account. So I hope this question is clear to all of you. I'm moving to the next slide and showing you the next question. Okay, question number 25. Guys, in this question, there are three partners. So this is little different from the previous question. In the last question, there were only two partners. So this time we have three partners, Amal, Bimal, and Kamal. And on the 1st of April 2015, their capital balances are 40,000, 30,000, and 25,000. They have decided that they will be entitled to claim interest of 5%. Salary will be given to Amal. Bimal will receive a commission of 4% on the profit after deduction of the commission, interest on capital, and salary. Okay. So Bimal will be given a 4% commission after deduction of the commission itself. Okay. So now again, this time commission will again be calculated in the same format as we were solving it in the previous question. Now, in point B, question says that after deducting all of these, 10% of the profit will be transferred to the general reserve also this time. And profit for the year is 33,360. So 3,33,060 is the total amount of profit. So guys, since we have only 4 minutes left in this session, and I need to start a new session with the other students as well. So I don't think we will be able to solve this question in today's class. So therefore, I'm giving you this question as homework. I hope all of you can try this, and all of you can solve this. If you are not able to solve it, then we will solve it in the next class. But I'm pretty sure that if you try to solve this question, you will be able to solve it. Anyways, please take the screenshot of question number 25. This is going to be homework. And this is almost similar to the previous question. Everything is almost same in this question also. Only thing is that this time we have three partners. This is the only difference. Done with the screenshot, everyone?
Yes, sir.
Okay, anybody want to ask anything? Any doubts?
Excuse me, sir.
Yes, sir.
Sir, in C, they're saying Bimal would receive commission on net profit after deduction of the commission. Do we have to do the same thing like 4 by 104?
Yes, we have to do the same thing.
Okay.
Whenever question says that we need to pay commission after deducting the commission as well. So always remember that we have to apply the same formula.
Okay, sir. Thank you.
Okay. All right, guys. So this is it for
Excuse me,
today's
sir.
session. Yes.
When will be the backup class for me? Like last week's
Okay.
3
Hiba
classes.
is, sorry, Hiba, I completely forgot to arrange a backup class for you. I'll talk to my team today, and they will definitely get back to you. They will tell you the backup time. I'll talk
Okay,
to
sir.
Mr. Amir today. Okay.
Thank you.
All right, everyone. This is it for today's class. Thank you so much. Goodbye and take care.
Thank you,
Thank
sir.
you.